Two buyers write offers on the exact same house in Waukesha. One comes in at $425,000 and the other comes in at $420,000. And the seller takes the $420,000 offer. Yep, they intentionally left $5,000 sitting on the table. Why, you ask? It's absolutely nothing to do with the price.
It's the Mortgage 101 podcast where real talk meets home and life.
Welcome to Manley's Mortgage Minutes. I'm Manley Haines, and every week we cut through the noise and talk about what's actually happening here in Milwaukee's metro market so you can make an educated decision and move forward with confidence. Today, we're talking about the difference between being pre-approved and being fully underwritten. By the end of this, you'll know exactly which one you're holding, why the listing agent looks at them very differently, and how you can strengthen your position before you even write an offer. Most buyers are walking around with a pre-approval letter. A lender took a look at your financial picture, reviewed some information, and gave you a letter showing you what you qualify for. And listen, you need a pre-approval letter. Most real estate agents today aren't going to start running you around all over Waukesha County looking at houses without knowing what you can actually buy. But here's the part most people don't understand. A pre-approval letter is still a lender saying, based on what we've seen so far, it looks good. It's not the same thing as an underwriting decision. At Rate, the next step is a power bid approval. That means we take the file further. We get a fully underwritten credit approval before you ever write an offer. We have an underwriter verify credit, we verify the income, we verify the assets. Not guesses, not, yeah, that should probably work. It's verified. The approval is good for 90 days. And with our turnaround times, in many cases, you can put yourself in a power buying position within 24 hours. Now, does that mean the whole transaction magically is guaranteed? Of course not. We still need the house. We still need the appraisal. There is still a final review, and the details are in the description. But the big difference is this: the underwriting on you is already done. So let's go back to that house in Waukesha. That listing agent sees the offer at $425,000 with a standard pre-approval. They know that buyer still has to make it through underwriting. Then they look at the $420,000 offer and see that the buyer has already been fully underwritten. Now put yourself in the seller's shoes. They're not really deciding whether you want an extra $5,000. You're deciding how much certainty you really want. Because if the higher offer falls apart 3 or 4 weeks from now, you're back on the market, you've burned a month, your moving plans are sideways, and every new buyer starts wondering, okay, what happened to this house? That's where a strong approval can change the entire conversation. It's not always about throwing more money at the property. Sometimes the strongest offer is simply the one that looks the most prepared to close. Here's the bottom line. Borrowers have more leverage in this market than they've had in quite a while. We're seeing more inventory, more price adjustments, and sellers who are actually willing to have a conversation again. But leverage doesn't do much good if the seller isn't confident you can get across the finish line. So, if you remember one thing from today, remember this. Don't just ask your lender, am I pre-approved? Ask them, has an underwriter actually approved my file? Those sound like similar questions, but they're very different answers. And when you're competing for the right house, that difference can matter a whole lot more than $5,000. If you're thinking about buying and you're not sure where your approval actually stands, just reach out. We'll help you understand what you have and what you may need and how to put yourself in the strongest position possible before you start writing offers. And check out the Mortgage 101 podcast. Every Wednesday, Anthony and I dig into what's happening behind the scenes in the mortgage and the housing market, cut through some of the nonsense, and give you some information that you can actually use. I'm Manley, and I'll see you next week.